Hi there, thank you for viewing this week's video. Let's take a look at the indices and check out how they have performed for the past week and also the outlook for the upcoming week. So first, let's do a quick discussion on the market performance last week. The US market began with a sell-off as major indices were pushed to their respective support level, especially during the period and the point of time when CPI data and the first bank results were released. So as anticipated, the indices were kept within a trading range. So the CPI data tops 9.1% out of the expectation. As I mentioned last week, I thought the CPI number should be coming down as gases price and oil price were coming down. But unfortunately, there are some data which I do not have access to were going up. Now, anyway, the market did not crash after the CPI numbers and the first bank result were released, although they are kind of disappointing. So the market was managed to rebound off from its support level. And the strong retail sales and blowout Citibank results has helped the market to rebound strongly and close the week at the high note. Going to the Asia market, the STI remained in a trading range, while Hang Seng ended its uptrend with multiple break of support level. Now let's take a look at the performance chart over here. We are looking at the performance charts of the various indices here, and Dow is down about 0.13%, S&P 500 0.95%, STI down about 1%, Nasdaq about 1.6%. The worst performing index is Hang Seng, down 6.6%. Now let's take a look at the technical chart over here. So we start off with the Dow. We can see a very strong closing to the week as the Dow rebounded back towards its minor resistance at 31529. Now, with this rebound, it actually gives the index a chance to continue higher, as we can see that the market's closing is at the high, so which means that the market is sort of like confident that there might be a chance to continue to go higher. Now, if the index can continue to do so to hit this resistance at 31895, then this is a very positive sign, and the sign of market bottoming may be near, especially when you break up from this resistance. So to look at the weekly chart would suggest that the index has really a good chance to rebound, especially if you look at here. This is a doji, and seems like the market is trying to find a bottom over here. All right, so usually if you look at the previous candle, you see a very long lower shadow over here, and the market tends to rebound. But of course, we cannot guarantee how far the market will go, especially now the big picture is still very bearish, and the upcoming FOMC would definitely hike 0.75% or even higher, I mean the interest rate. But nevertheless, the weekly chart do suggest more positivity going ahead. Then let's look at S&P 500. We have this rebound from the support level at 3740, and a confirmation for the hammer pattern as well, the daily candle. And if you look at the resistance, we form a minor resistance at 3919 for S&P 500. And if it can continue higher to retest this resistance, especially when we hit 3945 and above, then we may see more upside. Of course, same as Dow, then the bottoming sign is there. If you look at the weekly chart, it's also the same. We have a weekly hammer over here, and the tendency to rebound is there as after a weekly hammer. So we do want to see some confirmation next week. Then we have S&P. Next is Nasdaq. You can see Nasdaq is actually on the uptrend with this uptrend line plotted. So the good sign is that Nasdaq was able to rebound from this uptrend support. And what we have is a positive ascending triangle like pattern over here. So the major resistance is at 11,681. So if Nasdaq is able to retest this major resistance and break out from this resistance, then the projected level is 12,790. So we really need to see some positive action to go back to this resistance going forward. Now, if you look at STI, STI were able to hold at this major support at around 3089 with a white candle closing on Friday, and this provides a glimmer of hope for more potential rebound to this major resistance at 3151. Of course, if you look at the weekly chart, we don't have any positive sign as yet, especially we don't have a white candle closing here. And in fact, we were in the danger of breaking down if the market continue this movement. Okay, so if we continue such a consolidation as previous, so we can see a breakdown and the index starts to trade at a lower range again. Now, let's look at the daily chart again. So what we need to see is a positive movement to 3151 next week in order to help to have some positive sign, and in fact a breakout would help the market to break into a new trend. The Hang Seng, as you can see, it was trending nicely over here in the past, and it was so off to break the uptrend support, okay, the uptrend line support, and then this previous resistance support over here. And what we see is that the Hang Seng has been so off continually to break the next key support at 20,698. Now, the reason behind this sell-off is that the market is saying that the crackdown is not done yet, as Tencent and Alibaba has been under scrutiny again. First, they got fined at the beginning of the week. Second, Alibaba has been probed for data leak. And then after that, we have a debt issue in China, where a lot of public is unhappy with the handling of the developer, where they stopped the construction of the new project. And of course, China's GDP has been announced that is below expectation. So that's why the sell-off was quite heavy. So as such, the index is moving back to the path of downtrend. And if you were to move lower, the next key support level to look out for is 19,893. All right, so wrapping up, what we are looking at next week is that the US and Singapore market seems to have a chance to rebound higher, while Hang Seng seems to be lacking and may be continually going down. Okay, even if there is a rebound for Hang Seng, it may not be able to break above 20,699. So that watch out for some potential dead cat bounce. Okay, and for the next week, the market data will be the housing and big corporate results. Netflix is going to announce results on Tuesday during the market trading hours. So I remember last quarter when Netflix announced its result, it dragged the whole market down, especially those internet content provider like Google, Roku, Disney Plus, or Disney. So if this were to repeat again, well, the market sentiment may be soured by the results. And not to forget, the CPI data from Europe can affect the market movement as well. Okay, so we have to watch out for this as well. So no doubt that technical signs are positive, but of course there's still room for failure. There will be a 30% room for failure, 70% chance that the market may be moving to its resistance. So hopefully the 70% comes true. and then we will see the index testing resistance, and if they can break out from it, will be even better. Okay, so I will see you next week